Well, hello and welcome to another video from Real Tail Trader. My name's Simon Gray, and back with you with a review on a Monday of the foreign exchange or currency markets. Just a quick disclaimer, as I always do. This is not an advisory service. I'm not suggesting you buy or sell or do anything that I'm doing. It really is for information purposes only, and it's just a record for me of what I'm doing and how I'm doing it, and maybe will provide some inspiration to you if you're new to the markets or have been in the markets for a little while. But as I always say, trading is about your own personal style. Do not copy anybody else, is my advice. You find your own way in the markets that's suitable, in line with your personality and the way that you like to trade. With that said, if you do like my approach, you can find me on eToro. My name on eToro is Simon G Forex, SIMONG FOREX, and if you do want to follow my strategies on there, you can do so. But yeah, it's a different proposition altogether. So I'm going to kick off with the pound. Not a lot going on here. This is cable. I'm not doing much on here. I've identified what I see as a bearish trend here. We're in the middle of these two trend lines. I'm standing on the sidelines. I'm trading a euro pound position. Yeah, I'm not really doing too much here. We're at the top of a trend line here as I see it on the euro. So pound and euro both up a little bit today. The euro has been a little bit stronger than the pound in my analysis, which we'll see when we get to my euro pound long. But yeah, there we go, not too much going on there. US dollar, Japanese yen. The yen, you'll see we were in a range here, which I identified on my daily time frame. We've now broken below the range, the bottom of the range, which coincided with the even handle 110.00. So some real big momentum down here on the day. This broke at around about, what time were we? This broke at around about, yeah, that was the 2 o'clock candle there. So yeah, there's some big momentum there. What you'll see here, this level here, this was where anyone buying would have had their stops. So prices come down, trigger the stops, and you've had a stop run. As I talked about in a video I did, I think it was last week, what you sometimes see then is once the stops have been cleared, you see a reverse position before the market then moves in the direction it was going anyway. But so far we're seeing more downward momentum in the yen, which suggests that there's active sellers. So not just the stops that have been hit, the people forced to get out of their long positions, but this is giving me a clue that new sellers are coming into the market short of this particular pair, which is good news for me when we get to the pairs I am in, because I am short Japanese yen. Swissy, yeah, this has been a bit of an interesting one. I'm not 100% clear on the direction here. We've been very bullish on the Swissy for a while. We had this consolidation level up here. You may remember that I was short up here, took some points out of the market reversed, and then we've had this big drop. Sometimes happens. So I'm standing on the sidelines of the Swissy. We'll see what happens. Aussie, not really much going on here. We're potentially now into a short position below the range. This is the range I've marked on the daily chart. If we get much lower, I'll reclassify my assessment of this pair into a bearish trend. Yeah, we'll see where we go, but I'm not doing too much on that. Let me just switch to what I call the synthetic pairs, where I am more active. Got a number of positions on here, which I'm going to go into a little bit more detail on. But while my charts load, last week was a little bit of a frustrating week. We had a bank holiday here in the UK. That kind of squeezed the activity I was doing into 4 days. Glad to see we're back on a Monday. The market opens on a Monday and sets me up nicely, hopefully for the week. And with that said, this is my euro pound long. Now I've been in this trade since the 6th of this month, so what are we talking, about a week now. Gradually rolled my stop up as we've gone. I had a first position on here. I added a second position here on this candle once we closed above the simple moving averages, the 50 the pink and the 200 the blue. And now we're moving up to this level, which is the top of the range. Now, what I'm going to do here, given that this is progressing up towards the top of the range, and we only need a bit of a stop run here to get there, because this is the range strategy that I'm playing. You know, I bought down here off the bottom of the range, it had turned around, but because my trend strategy is also kicked in, because I've had the 10 exponential moving average cross the 50 simple moving average, then what I'll do here is I'll take off half of my position as profit, then I'll let the remainder run and I'll trail my stop all the way up. So this is kind of a quasi range trade, which then turns potentially into a trend trade, because what you tend to find is within the range you get some of these short term trend signals that I play. So see where we get to. Hopefully we'll get up here. Not sure. This blue here is the target I'm trading in eToro. Unfortunately, eToro doesn't give me the facility to take off partial positions, as does my regular broker. So I have to play a slightly different strategy, but in line with the same principle. So this trade working really, really well. And when we get up here, as I say, I'll take off half the position. If we progress upwards, I'll hold that. Yeah, and T is his target at the extreme of the range, then may play a short position back down here. You'll see on this pair, you know, this has been a really nice range. If you played this down, up, down, up, down, and then up, you'd have made a lot of money. And this is what I like to see. The simple moving average, the 50 down the middle, the 200's flat. These levels are holding pretty strong, which makes a tight stop. So, you know, all looks good until it breaks. But you know, remember, one of the problems I used to have in the past when I started out my trading is I believe this thing that the trend is your friend, and that you always take trend trades. Now the market is trending probably 30% of the time, which means 70% of the time you could be wrong-footed. So I really like to play these range strategies, and since I've incorporated a range strategy into my approach, it's led to increased profitability and consistent profitability. Okay, let's have a look at the. Oh, this is going nicely. This is a trade I put on today on the close of the 10 o'clock bar. You'll see that YX signal. This is my full house strategy. So basically all of the simple moving averages that I look at weekly, daily, and 4-hour chart, they're all telling me this is bearish prices under all of them. I got a YX signal, one of my proprietary signals. This followed a Z signal here. So I sold off the close of this candle. I'm about to take hopefully half of my position when we get to this initial target, 1-to-1 risk reward, and then I'll hold the rest for as long as I can. You'll notice that I've moved my stop to entry before hitting my target here, T. The reason I've done that is because I'm always cognizant of correlation risk, and what I mean by correlation risk is, you know, how many different pairs am I short the yen, and I had 3 positions that were short the yen. My rules tell me that I can't have 3 open positions, i.e. where I could lose money on one particular pair. So I rolled my stop here. This became a 100% protected position. So I was then in line with my correlation risk rules. One of the mistakes you can make as a beginner, you know, you get the same signal on multiple pairs, and then if that signal reverses, something happens in that particular currency, then you can be stopped out of all of your positions and take a bigger loss than you expected. So I have a rule: I will only trade 2 correlated unprotected positions, and an unprotected position is when my stop is not at entry. Yeah. This is the pound Swiss franc. We're heading down towards the bottom of this range, and again I will probably buy here. Got the protection of the daily 200 simple moving average here, so this will be a buy down here. And look, that corresponds to the even handle 1.3000. This is going to be a buy right here, which I may buy on a buy limit, I may buy on a market order, depending on how price behaves down here. Okay, pound and Aussie. Okay, so yeah, today, been busy today, bought this pair today on the close of the 2 o'clock candle. This was my trend signal. So the orange line you can just see is the 10 exponential moving average. It crossed above the 50 simple moving average on the 240 chart. That to me is a trend buy. So I bought that, and you'll see if I roll out to the daily, this potentially is resuming the trend that we see on the daily, which then could push up into the even handle up here, 1.9000. But again, don't know. I'll roll my stop as we go. But at the moment, this trade is working. We're above the previous consolidation level here, so there is potential more momentum up here. Euro yen. Yeah, I was looking for a full house trade here. Again, it's a similar story. The SMAs are telling me this is a bearish pair. I didn't get that signal yet, so I'm waiting. Patience is a virtue in trading, but this to me, bearish. Difficult for me to trade this position, this pair at the moment, because that would give me back to multiple correlation risk short the yen. So I need to wait and see how my other trades play out, get into a position of profit there, roll the stops before I could take a signal here. Euro Swissy, this trade is working out nicely. This was a really frustrating trade for me for a while. I got in here. This was distribution up here, so we were down, then we were up. I hit my target, my first target here. I missed it there. I roll my target back to hit, so I took off half the position here. So this is a profitable trade already. My stop is at break even now. So this is a win-win scenario. This is an interesting pair now, because what I'm looking at is I am now waiting to add a second position. I always pyramid into my trades if they're working. So this is risk-free. What you'll see here is if this bar, which closes at 6 p.m., if this closes below the 200 simple moving average on the 240, the 4-hour chart, I will sell off that candle with my stop up here. Roll this stop here, and you'll notice that that level corresponds on the day. You know, we are trading now on the day. This candle hasn't closed, but we're trading below the 200 simple moving average and the 50 simple moving average. So if we get a close here at 6 o'clock, I'm reasonably confident we're going to see more downside momentum, certainly on the balance of probabilities. That's what I would expect. So I'll sell on this candle. These are the trades I love. You know, you get a profitable position one, you add a second position, and then maybe you add a third position right into the lows of this range. And these are my most profitable trades. If I look at my return last month, 11.7% on my capital, that principally was down to 3 trades that I played like this, adding 1 position, 2 position, 3 position. So you only need to be right 3 or 4 times, and I had a 55% win ratio, which means I was wrong 45% of the time. But the difference between my approach and maybe the approach of other people is when I'm wrong, I get out, and when I'm right, I stay in. So that's why you can have a 55% win ratio with a 11.7% return on your capital, whatever your capital is. So if you like the sound of that, have a look at eToro, Simon G Forex. Euro Aussie, yeah, not doing much on this. It looks like we've broken above the range here. So I'm not getting any signal at the moment. If I have a look at the ways I can enter, the strict rules that I can enter on, if I look at my Euro Aussie, in fact, yeah, this could be a full house trade here, because all of the simple moving averages prices above all of them on the time frames I look at. So if I get a candle signal here, I'll buy on that, and I'll be in a full house trade. Okay, Japanese yen short, sorry, no, Japanese yen long, Swissy short, so I'm selling the Swiss franc, buying the Japanese yen. This is a full house trade again. So look at this, 50 simple moving average on the 240, the 4-hour chart. Selling off that. That was a rejection of that level at the top of a trend line. Similarly, if you look at this, it's all downward momentum. We had a gap down here as well. So yeah, I've sold into that. Taking a bit of heat here. That's not uncommon, but I'm confident as confident as you can ever be. I'm confident enough to place a trade and put my capital at risk that on the balance of probabilities will get down to hit my my initial target. Aussie yen, yeah, this is a trade where I where am I? Yeah, entered here, position 1. Entered a second position here. This trade is now pyramided and is in profit. So this trade is doing well. I'm going to hold this for as long as possible. And as I said, this is the way I generally make my money. Each month, I get a trade that's working, and I add to it, and I add to it, providing it keeps working. And I protect myself as much as possible by rolling my trailing stop down. And I only need 4 of those a month to make a very decent return indeed. So last pair I look at, I only look at 15. I like to specialize. Look at this. Wow. Swiss franc. Look, we're just coming into this even handle level 0.7000. Getting a bit of rejection of that level, which is not too much of a surprise. I've got no signal here at the moment. This is all sell on my SMA analysis, simple moving average analysis. So I could get a full house signal here. What we could get is a reverse back up here and a trend trade if the 10 exponential moving average crosses back above the 50 simple moving average. So that's just a quick walk through some of the stuff I'm looking at. May sound a little bit technical if you're new to the markets. What I can tell you about my approach is it's very, very, very simple indeed. It may sound complicated, but it's very, very simple indeed. I basically trade 3 strategies: 2 trend strategies, main trend, and then a full house strategy. And I also trade a range strategy where I sell at the top of the range, buy at the bottom of the range, and that's it. And then I have specific rules about adding up to 3 positions. So I have a maximum of 3 positions in any one trade. I roll my trailing stop to lock in profit, and if things start to turn against me, I have very strict rules on exiting. So my approach is very methodical. To a certain extent it is mechanical, because I know what to do and when to do it without the emotion of the markets. But there is some discretion in there, because what I need to be thinking about, and this is the human element in my trading approach, is okay, which looks to be the better opportunity? Because if I've got multiple opportunities, I'm not necessarily going to take all of them, but I'm going to take what I believe to be the best opportunity in terms of risk reward. How far could this potentially move? Where I have correlation risk if I'm already short or long a particular pair, and that's where the human discretion comes in. So it's a combination of very, very strict rules, kind of mechanical type rules that I've tested and know the probabilities of, and some discretion in terms of which opportunities to take. So hope you enjoyed that. Hope you found that useful. If you like that, please follow, subscribe on YouTube, Real Tail Trader. Hit the notification button, and if you want to check out and follow my trading approach, you can also jump onto eToro, and my username there is Simon G Forex. So safe trading. That's it for today, and I'll be back with another video probably tomorrow, but at the very latest next couple of days. So take care and talk to you soon.